Well, welcome back, everyone. I'm John Muschalek with HilltopSecurities, and I'm here with Tom Kozlik, Managing Director and Head of Public Policy and Municipal Strategy for Hilltop for our 20th edition of the Muni Minute.
Happy anniversary.
Yeah, well, happy holidays.
Happy holidays.
Right back at you. So look, we're coming to the end of 2025. We had an FOMC meeting last week. What is the latest from a macro standpoint and the municipal bond market perspective?
I mean, what's happening is really anything but boring. I mean, on the one hand, I'm seeing economists raise their economic growth outlooks for 2026, which in a lot of ways is a good thing. On the other hand, one of the things that happened with the Fed meeting last week is they did lower rates by another 25 basis points. But the real important message is that they're communicating to folks that the market shouldn't expect a lot of cuts to start the new year, right? So that, in addition to the fact that we've been signal hunting, and there's some labor market data not just for October and November that was relatively weak, but for the last several months has been pretty weak, right? Not weak enough. I'm describing it as though it's bending but not breaking, right? Okay. So we're still at a point where we need to see more data before we get more cuts in 2026.
Some are asking why municipal yields did not fall after last week's meeting. Can you talk about that a little bit?
It's actually pretty simple. The market has been pretty range bound going back to the middle of October. And so in a lot of ways, the December cut was already baked into what was happening. And that's really my base case going forward. I'm expecting rates to remain pretty range bound, at least to end 2025 and to enter 2026.
Okay. So look, we've been through a lot this year. We go all the way back to the tariff tantrums. We got the Fed finally starting to cut rates as we move through. What do you have to say to investors as we finish out 25 and 26, going back to your last comment?
So I think that investors need to remain patient to end the year and start the next year. That being said, they can also take advantage of the still generationally attractive yields that we're seeing. Where that range bound level, I mean, they're still very, very attractive. Right, so I think that investors can still continue to take advantage of those yields.
Okay. Well, everybody, that's going to be a wrap for 2025. So on behalf of Tom Kozlik, HilltopSecurities, we want to wish everyone a happy holiday and all the best in 2026. Thank you.